Step into the auditorium of the future and open your mind to the fundamental architectural shift happening right before our eyes. Welcome back, visionaries and technological pioneers, to another exploration of the next era of human coordination. Today's keynote is titled "Ripple's New Strategy is Turning Heads in Crypto." But that headline barely scratches the surface of the technological singularity we are rapidly approaching. We are no longer simply observing the evolution of digital currency. We are actively witnessing the complete rewriting of the global financial operating system. Think about the early days of the internet, when skeptics looked at dial-up connections and laughed at the slow, clunky interfaces. Today, the retail crypto market is looking at the current spot price of $1.40 and making the exact same fatal miscalculation. They are entirely focused on the temporary latency of the current market cycle, while the brightest engineering and financial minds on the planet are quietly laying down the fiber optic cables of the Internet of Value. Ripple's new strategy is not about chasing the speculative retail hype cycle that dominates social media feeds. It is about total, uncompromising enterprise capture. What is turning heads in the highest echelons of Silicon Valley and Wall Street is how Ripple has seamlessly pivoted from a defensive legal posture into an aggressive, infrastructure-dominating apex predator. The retail masses are currently trapped in a psychological glitch, staring at suppressed red candles and feeling a deep sense of profound disappointment. But if you zoom out and look at the macro-level code being deployed across the global banking sector, a beautifully complex matrix reveals itself. The institutional algorithms are deliberately keeping the retail price suppressed to facilitate the most massive transfer of digital real estate in human history. They are quietly absorbing the physical tokens from impatient retail holders who fail to grasp the magnitude of the underlying technological convergence. If you sell your holdings during this foundational building phase, you are effectively trading away your ownership stake in the fundamental base layer of the future economy. You must elevate your perspective above the daily noise, recognize the deliberate manipulation of the legacy market makers, and align your vision with the architectural builders who are constructing the next century of finance. The future is written in the code. This is the genesis block of a brand new era, and you are standing exactly at ground zero. Let us transition our focus to the enterprise bandwidth and the silent acquisition protocols currently executing in the background of the United States economy. The mainstream narrative suggests that the institutional appetite for digital assets has entirely evaporated due to the recent macroeconomic turbulence. This is a spectacular illusion designed to blind the uninitiated. While the public retail price remains artificially constrained, the United States spot XRP exchange-traded funds have quietly achieved an astonishing milestone. These highly regulated institutional-grade investment vehicles, managed by titans of asset management like Bitwise, Canary, and Franklin Templeton, have successfully sequestered over $1.3 billion in physical assets. How is it technologically possible for $1 billion of concentrated demand to enter a network without violently expanding the spot price? The answer lies in the elegant yet ruthless efficiency of over-the-counter dark pools. These massive asset managers are bypassing the public retail exchanges entirely to avoid triggering a premature supply shock. They are systematically sourcing their digital liquidity through private institutional channels, absorbing the capitulation of retail investors while simultaneously utilizing perpetual futures contracts to artificially cap the upside volatility. This is not a market crash. It is a highly sophisticated algorithmic accumulation sequence. To fully comprehend Ripple's new strategy, we must also analyze the explosive scaling of the RLUSD stablecoin infrastructure. In the span of just a few months, RLUSD has violently expanded past the $1.5 billion market capitalization threshold. Retail observers mistakenly view stablecoins as a threat to the native XRP token, which fundamentally ignores the underlying physics of the network. The XRP ledger is the operating system, and RLUSD is a high-speed application running on top of it. In order to process these massive stablecoin transactions, the network absolutely requires the consumption of XRP as cryptographic gas. As Fortune 500 companies integrate RLUSD into their treasury management systems to escape the friction of legacy banking, the mechanical burn rate of XRP will accelerate exponentially. This creates an unyielding, purely mathematical demand vector that operates independently of retail market sentiment. The network is scaling flawlessly, and the supply is tightening. We are watching the seamless convergence of traditional Wall Street liquidity and decentralized cryptographic efficiency. The smart money is officially migrating. Now, we must elevate our perspective to the geopolitical layer, where Ripple's new strategy is fundamentally rewriting the intersection of sovereign law and cryptographic truth. The most visionary move of the entire 2026 fiscal cycle is unfolding right now, and the retail market is entirely missing the paradigm shift. Recently, we received the groundbreaking confirmation that Ripple's Chief Executive Officer, Brad Garlinghouse, has officially been appointed to the Commodity Futures Trading Commission's Innovation Advisory Committee. The technology company that spent years battling the United States Securities and Exchange Commission is now literally sitting inside the federal regulatory apparatus, actively architecting the legislative framework for the global digital economy. This is not merely a corporate victory, it is a profound systemic integration. By embedding themselves into the core of Washington, D.C., Ripple is ensuring that the XRP ledger becomes the default compliance standard for the future of decentralized finance. But the breathtaking scope of this strategy extends far beyond American borders. We are currently witnessing an unprecedented European expansion that is turning heads across every major financial capital. Societe Generale, a colossal French banking institution managing over $1.8 trillion in global assets, has officially integrated its MiCA-compliant Euro stablecoin directly into the Ripple infrastructure. Concurrently, Elite Intelligence confirms that Deutsche Bank is aggressively adopting Ripple's enterprise technology to modernize their archaic cross-border payment architecture. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized ledger into their core operational frameworks, it validates the network as the undisputed bedrock of future global settlement. The retail market, hopelessly paralyzed by the short-term price manipulation hovering in the $1.40 range, is utterly failing to comprehend this reality. They are selling their assets out of pure psychological exhaustion, right at the exact moment when the legacy financial titans are locking the foundational infrastructure into place. The integration of these massive European and American banking entities guarantees a tidal wave of future utility volume that will mathematically overwhelm the current algorithmic price suppression. The old financial system is dying, and Ripple is seamlessly installing the upgrade while the public is completely distracted by the engineered volatility. You must see the bigger picture. The architectural convergence is happening right now, and it is absolutely beautiful to witness. As we conclude this exploration of the future, we must translate this sweeping macroeconomic and technological convergence into a highly disciplined, actionable protocol for your personal wealth preservation. We have illuminated the massive institutional accumulation hidden within the ETF dark pools, the exponential utility growth of the RLUSD stablecoin engine, the astonishing federal regulatory capture via the CFTC, and the colossal European banking integrations. So what is the ultimate mathematical destination of this network? The most advanced predictive analytics models, continuously refined by elite quantitative analysts at institutions like Standard Chartered Bank, have established a macro-adjusted baseline target of $8 per token for the conclusion of the 2026 fiscal cycle. To the uninitiated retail observer, paralyzed by the current artificial price ceiling, this projection sounds like an impossible fantasy. But to the technological visionary who understands the mathematical inevitability of a massive supply shock colliding with exponential utility volume, an $8 valuation is merely a conservative stepping stone. A calculated leap from the current suppression zone to that institutional baseline represents a staggering asymmetric return on capital that completely redefines traditional investment metrics. However, you cannot successfully navigate this transition without a ruthlessly disciplined framework. Human emotion is the ultimate enemy of generational wealth. I strongly advocate for the implementation of a rigid, automated strategy known as the Thirds Protocol. When the network price inevitably shatters the historical all-time high parameter of $3.84, you must algorithmically liquidate exactly 33% of your holdings. This single, unemotional action recovers your entire initial capital deployment, instantly transforming the remainder of your portfolio into pure, stress-free profit. The secondary operational tranche is designated to ride toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation. The final tertiary portion must be secured in deep cold storage for the ultimate 2030 macro play, anticipating the network's final evolution into the absolute core of the tokenized global economy. You must upgrade your cryptographic security infrastructure utilizing hardware authentication immediately, as malicious actors are escalating their attacks on vulnerable retail wallets. The global financial operating system is undergoing its most profound upgrade in a century. Execute your visionary strategy with absolute precision, and I will see you at the summit of this technological revolution.